Hello, hello. Welcome back to another diary entry for the week of October 20th. It was by far my best closed P&L week ever, with a closed P&L of $16,884. No, I did not misspeak. Yes, I have a closed P&L this week of $16,000, almost $17,000. Now, that does not come without caveats, and I'll break down where that came from, how I got to that point, and what I'm planning to do in the next week or so. So the main event, the centerpiece of this week's closed P&L was Google. Google is something I've been talking about in all of my videos the past couple weeks, actually. If you recall, I think 2 weeks ago, I was holding some of my Google calls through a $9,000 drawdown. That was down in here when Trump made his big announcement. And in the following week, it bounced back up to about break even. And throughout this, I really felt that based on the price action compared to the rest of the market, to me, it indicated there were a lot of buyers, there was a lot of interest in here. And so I was very willing to hold on to it. And the crucial moment for me taking profits on Google and locking in such a large gain was on Friday. So on Friday, it came out with a CPI announcement. We'll go to the 30-minute chart. And the CPI was super great. Like, SPY went up, a lot of stocks went up. And I had sold the 262.5 covered calls or calendar spread on my existing position. But I'd also told myself earlier in the week, like, if it does get to this point, which is like near this trend line that I've drawn several months ago, then yeah, I'll take profit up here if it gets there on Friday. And the crazy thing is, it did get to right about there. It got to 262, right about 262.5 on Friday. And so around this point, I think I took 3 contracts off here. I took 3 more off after it had pulled back a little bit. And my total gain on the 9 contracts that I exited was $9,816, excluding fees. So yeah, that was crazy. It was like a multi-week swing trade on Google, holding through a big drawdown and coming back up for air. Like I said, it came to some caveats. So I actually re-entered Google rather quickly. And not only did I re-enter Google, I paper-handed some shit. Excuse my language. I paper-handed some things. So right in here, I thought to myself, I see these red candles, but all these red candles are being bought up instantly. Like, sellers are having a really hard time pushing this down. This is indicating to me that long-term buyers really want in. They're seeing every small dip as an opportunity to keep buying this stock, even when the rest of the market may not have been doing that. And so this indicated to me that long-term money wants in on this stock. And so I initially bought back in for 5 contracts at a higher strike price, lower delta. So still decreasing my position size. But then I paper handed because I was like, oh, I'm losing money now. And I actually lost $500 just from buying it here and then selling it. But then I took a look in the mirror, rhetorically speaking. I didn't actually look at myself in the mirror, but I told myself, okay, Christopher, what is actually going on? What should you do here? And I ended up buying back in for 6 contracts, 3 in the money, 3 out of the money, for, again, a slightly lower delta, so they're cheaper. My overall position size is much less, and I plan on just holding it through probably most of the calls through earnings next week, because the position size is so much less than it was before. I've de-risked, and I am willing to hold on to Google long term. I still think it's, I use Google Gemini. I think it's a great tool, and I think the hate on Google is undeserved. But that's just my opinion. I like Google. I still think it's really great, and I will be looking for opportunities to build more position after earnings, because earnings are coming up on Wednesday, I think, for Google. Yep. And that will be a large move in either direction, probably. So I may hold through another drawdown in the near future, but I'm not overly concerned. Okay, enough about Google. Let's talk about the next chunk. So the next chunk of win came from AMD. So I'd mentioned last week, actually, I'd lost money on AMD, where I got assigned puts, and then I sold a really stupid covered call, and then I bought it back for a $3,000 loss. So as of last week, my closed P&L on AMD, which I included in last week's P&L, was like minus almost $3,200. And so I resold a call because I was rolling the call to this Friday. And on this pullback here, and when it was starting to bounce a little bit, I bought the call back because I saw it was retaining some, it was like holding strength. I saw the buyers come in. So I bought the call back for like a $1,200 gain. And when it ran up in here, I thought to myself, if it makes it to about 237.5, I'll be happy exiting my full position. I had 200 shares. Could I put it higher? Absolutely. But clearly after CPI, it rocketed and my shares got called away. So I ended up with another 3,000 plus the call premium that I sold for another $300. So overall this week, I closed AMD for like a $4,500 profit. And that's, again, not without some caveats, because the shares got called away at 237.5. AMD is sitting at $253 pretty much. And that's a $15 price difference from where my contracts got exercised, which means $15 a share times 200 shares, that's a $3,000 opportunity cost that I made when I sold the calls. And that is a risk, in a sense, of selling calls, is you're capping your upside, and sometimes you really cap your upside. So while I made good profits on this, well, it clearly could have been much better. But profit's profit, and I'm not really going to complain too much. But it's something for me to reflect on in the future with larger positions. Where do I want to sell calls? Do I want to have a call open? Did I need to have a call open here going into Friday? Maybe not. Maybe I could have just had it bought back and let it sit. So something for me to continue to reflect on. Now let's talk about NBIS. So I'd mentioned NBIS last week as a stock that I was holding through a rather large drawdown as well. But I wasn't overly concerned. And you can see through the course of the week, this is Monday, Tuesday, Wednesday. Wednesday it went all the way down to 94. And this was pretty bad. So I'd sold the 125 calls at the beginning of the week. And it came all the way down to 94. So I have 200 shares. That's like a $4,000 drawdown just from there to there. That is quite a bit, right? But it found some basing down at 94. And since then, it's bounced back. And it's had a lot of strength coming out after CPI. Like really nice buying. Compared to what some other stocks are doing, what the market's doing. So this to me is a good sign. I feel like I'm in a good place. I could see it coming back to where my break even is, which would be about 123. And then around my break even on the full trade, I would consider exiting, or maybe I'll feel a little greedy and think maybe to get back to all-time highs. So something that I will evaluate next week. But next week is going to be quite interesting given all the major tech earnings that are coming out. And a stock like this will most certainly be affected by that kind of event. Hood is another one. I could have traded this a lot better. I traded this well on some days, and on those same days I also traded it poorly. So let's take Monday, for example. So Monday on Robinhood, I was day trading it. And I was doing a relatively decent job day trading it on Monday. So you can see like it was buying right off the start of the market. I bought in, I traded this stuff early in the morning. Great. I was up like $200 or something like that, $250. And then I made the stupid mistake of glancing at my phone and placing a random trade up in here to buy, to go long. Lost that, and I traded another random one here. Like, these don't even look like proper entries based on like how I like my strategy. I was purely like, oh, it's buying, I should FOMO in. And then I gave back a whole bunch of gains. I still ended Monday positive on day trades, but I gave back like $80, $90 of gains right here just off of what? Nothing. There was no need for me to even think about taking any trades. There's always going to be trades to take. I don't have to take every single one of them, particularly if they're not good. So, something to think about. I did end up making a decent bit of money, a couple $100 trading here. Did a small buy right, which I should have just held into the shares instead of selling a contract on, because look how much it ran this week. It is crazy. Huge bounce back up this week. And now it's sitting at kind of a level of resistance, it seems like, based on the selling that it did in the last bit of Friday. But still a very interesting stock. This stock is very high average range, and so it can be profitable to trade this stock. And it's just, I like trading it. I enjoy trading it. I don't hold any long-term though. But yeah, those are the main things that happened this week. The main highlights were on those longer term, like large trades. My day trades this week overall were profitable as well. Like the trades that I entered and exited as day trades that were meant to be day trades, I made money on. And that is a huge improvement. And I'm very happy with that performance. Now, obviously those day trades aren't scaled as much as the swing trades. But perhaps once I continue to improve at day trading, I'll be able to scale in more on those. So what am I looking at in the coming week? So this week is earnings week. We got earnings coming up this week on Microsoft, Google, Meta, Apple, Amazon, and then a whole bunch of other big companies like Lilly, ServiceNow, Boeing. Like this week's earnings are going to be crazy. And so going into earnings this week, I've actually exited a lot of positions. Like this week was very much a profit-taking week on Friday for me, especially for a number of reasons. One, when you have such a large gap up, the market needs time to digest a move like this, especially in the uncertainty that we face every single day trading. And so I was thinking to myself, okay, we hit some all-time highs. I will take some profits out going into an unknown set of events. Earnings are very binary. Stuff can move up really high and move down really far low without any kind of warning. There is no kind of like technical analysis that can predict earnings. And so it's not very smart to hold into earnings if you're trading from a technical standpoint. Sure, if you want to hold stuff long-term forever, yeah, you can hold stuff into earnings. But for the trades that I'm taking, or a lot of the trades that I'm holding, I don't really want to hold them through earnings. That's why I've deleveraged my Google position quite a bit, and I pretty much took off most of my longer swings, and I plan on exiting Bloom Energy before earnings on Tuesday, and I've gone from using margin last week, like I was using a good amount of margin, to now I'm like 25% cash. I'm de-risking, I'm positioning myself to be able to capitalize on an earnings reaction. And I'll be able to see what companies do people really want to own right now, and what companies do institutions not really want to own. And you'll be able to gauge that reaction by how aggressive the buying is, how steady price can hold, what kind of candles that you see, the volume. All this stuff will be able to give me an idea of what stocks do I want to start building a new position on. And so I'm looking forward to what earnings will bring us this week. I hope they do well for my Google. But regardless, we'll get a lot more information this week and propel us into the end of the year, hopefully in a good state. So on that note, thank you so much for sticking around. If you've stuck around to the end of this video, I really appreciate it. If you haven't already, the like button, subscribe, make a comment down below how your week went, and I wish you the best of luck if you're also trading, and I'll see you next time. Thanks for watching.